Yeah, well, as we've talked about on this show many times, the banks are acting not only as brokers but as dealers and market makers, which means that they basically can commit crimes all day long. And when they're found out to have committed a crime, they use the excuse of, well, we're keeping the markets open, and if you pursue that investigation, we'll shut the markets. And so they can commit crimes with impunity. This is why the U.S. system is collapsing. You communicated with Bart Chilton recently regarding what you saw as this manipulation in the gold market. Bart Chilton, of course, is part of the CFTC, one of the commissioners. How did that go?
Well, in 2008, I noticed the huge arbitrage positions that were going on a daily basis between the prices of gold and gold futures in Asia and in New York. And sometimes, as I said, it's quite frequent for those disparities in price for the price of Asia to be 30, 40, $50 an ounce higher than the price that was determined in New York later that day at market opening of the COMEX in New York. And so when I pointed that out to Mr. Chilton, he responded that basically Asia was manipulating. It was not a free market in Asia, but it was a free market in New York, and that the Chinese were manipulating the gold market. But yet, some of the Chinese bankers had acknowledged the fact that, due to certain conditions, the gold market would be higher in Asia than in New York. But they said on average, they determined those factors to boost the Asian market only by $4 an ounce. So we're talking there's still unaccounted for $36 to $40 an ounce higher in Asia. What was accounting for that? And again, the CFT responded to me and said it's primarily because Asia was manipulating, whereas, of course, I believe it's primarily the New York bankers that were manipulating the price downward. So I highly disagreed with that response.
All right, so let's move on to what's happening in rare earth metals. China plans to open a rare earth metals exchange in order, they say, to set the price in China rather than bending to foreign expectations. Of course, China has a huge virtual monopoly in rare earths. Rare earths are the stuff that goes into lots of very popular gadgets around the world, like iPads and iPhones and iPods and things like that. And so what about this new exchange in China for rare earths? What's happening there?
Well, I think, basically it's a power struggle that we see, going on, and China's basically trying to take care of their own citizens because they do hold, as far as the known deposits of rare earths right now, they hold the majority. So they want to make sure that they have, the most influence in setting the price on the market as far as the rare earths are concerned.
Right. Well, I mean, it makes sense. Going forward, how critical will rare earths be in the global economy? Will it, for example, challenge oil in some way? Because oil, of course, we know we've hit peak oil, and oil as a component of the global economy will have to subside or diminish in some way. Are rare earths kind of the next major component of the global economy of the century going forward, perhaps?
I don't know. I'm not convinced that it is right now. I know, for at various points in times, rare earths becomes the kind of hot asset to get into. But I also know there's been a huge amount of speculation in the rare earths too that makes the price so volatile, up and down. So I'm not really convinced at this point that it will become as important as say oil and other energy commodities in the future. But it's something certainly to keep an eye on.
All right, let's talk about some risks out there, especially in precious metals. Now, the enemy of precious metals would be a higher interest rate environment. If the U.S. Federal Reserve, for example, were to raise the discount rate, raise interest rates, this would make the dollar attractive and would make precious metals less attractive. The quantitative easing of QE2, is set to expire this month in June. And so what's the speculation? Will there be more quantitative easing? That is to say, more money printing and more in the way of cheap and ultra-low interest rates?
I don't know. That's a hard call. I really think right now, though, that the Fed Reserve has kind of put themselves in a place where they're at the point of no return. So, they could certainly stop QE3 to see what happens. But I think if they not engage in QE3 to see what happens in the stock markets. But I think pretty much if they do that, then the stock market is going to fall quite significantly. So, it's whether a choice of whether they want to continue to destroy the dollar or continue to prop up the stock markets, because basically there's no volume in the stock markets anymore. And for the past, I believe it's about past year, the daily trading volume in the New York Stock Exchange has been falling as the U.S. stock markets have been rising, which shows it's a totally rigged, fraudulent rise. So the only thing that could sustain the U.S. markets, even at the level where it's at, I'm not even saying push it even higher, but just sustain it, is you need more QE.
Now, have you been following, up until recently anyway, the story with Citibank stock? Citibank stock was trading under $5, and it made up, you mentioned volume on the New York Stock Exchange. It was 30, 40, sometimes 50% of the volume on the New York Stock Exchange just trading Citibank stock. And it's widely known that this volume of Citibank stock was generated by computer trading from all the Wall Street firms who were creating synthetic arbitrage or arbitrage accounts and buying and selling the stock in ways to scrape pennies from the exchange and to steal hundreds of millions of dollars every single day. The stock then went through a reverse split. We don't see this anymore. But did you follow that particular scam on Wall Street, the Citibank penny stealing scam, while it was active for about a year or so?
I followed it slightly. I was aware of the huge amount of volume that it constituted of the daily trading volume on the New York Stock Exchange, like composite index. And I think I even remember a day in 2008 where it was something ridiculous, like something like 75% of the daily trading volume for like one day. So I am aware of that, but I haven't really followed the reverse stock split, that closely. But other than the fact that I know that it happened to, I guess, give it a price that makes it look more attractive to unsuspecting, naive investors. I guess that was the point of that, right?
Well, to make it eligible to be owned by institutions, it had to be over $5 a share. All right, well, we've got a couple of minutes left. You believe we are witnessing the death of capitalism. So what are the signs of this?
Well, the fact that basically, if you equate free markets with capitalism, I know like a lot of people have been misled about what exactly free market capitalism is, because, you'll have Alan Greenspan that says that free markets were responsible for the financial crisis. But really, I mean, today, I think like all markets are rigged. You don't have any free markets because you don't have supply and demand determining the price of any asset today. That's, a major asset that's globally traded. So you don't have supply and demand determining the price of gold, the price of silver, the price of oil, the price of stocks. So, that's what I mean by the death of capitalism, is that everything is rigged today. Everything's controlled by the top 1% of the banking elite in every country. And, you don't really have the theoretical policies of capitalism at work today.
Yeah, it's become rigged market capitalism. And those who are able to loan money into existence to those suckers in America and around the world who then put themselves into debt slavery voluntarily are laughing. At the end of the year, of course, they take the fake money that they created and they buy themselves real assets like gold, silver, precious art, things like this that actually have real intrinsic value. And this trend is getting worse and worse. And, of course, now I think if you look around the world and you see global uprisings in Spain, Ireland,
Sure.
Greece, Wisconsin, Cairo, and Tunisia, there's global insurrection against the banking banking occupiers is gaining ground. I know that the Economist magazine ran a story last year trying to predict which country would seek a regime change first and in what order. And of course, if you extrapolate that, you'd have to ask yourself, at what point is the entire globe going to experience some kind of regime change or global insurrection? Any thoughts on that? Handicapping when we'll see the global insurrection? Will it be this year, next year, ever?
Well, I think actually the turning point you'll see for that, and we are at a tipping point in many nations right now, is when the middle class, as it already is shrinking, when the middle class basically is forced into the ranks of the poor by the banking policies and austerity measures. That's when you'll see revolution, like in every country, is when that happens. Because I think people are kind of fed up that when things don't go their way, then what happens? The bankers just change the laws, right? You saw that in the silver margin hikes recently to crash silver from 50 to 33. Saw that back when the Hunt brothers tried to corner the silver market. They did the same thing. They raised silver margins. They capped, CME capped any individual trader as holding a maximum of 3 million ounces of silver. I think at one point the Hunt brothers held 55 million ounces. So it's forced liquidation. You know, when prices go too high, they force liquidation. When they talk about implementing position limits in silver right now, the CFTC says even if they do, HSBC and JP Morgan will be grandfathered in with their current short positions. But back then, when things didn't go their way, they say you have 5 weeks, you know, basically to adhere to our laws. So, you know, people are getting tired of just this constant, you know, manipulation and the constant changing of laws to change the laws when things don't go their way. And then their way being the banker's way.
All right, J.S. Kim, thanks so much for being on The Edge.
Thanks a lot, Max.
All right, and that's going to do it for this edition of On the Edge with me, Max Keiser. I want to thank my guest, J.S. Kim. If you want to send me an email, please do so at ontheedge@presstv.com. Until next time, this is Max Keiser saying bye, y'all.